Sorry about the little delay there. It was actually just a trouble logging in for some reason. I kept going into a room where I was by myself. So here we are. Let's get started. Great. Good to see everyone. So for those that are new to these sessions, what we do here is we apply our core strategy, our core supply and demand strategy, where we're looking at the price charts and looking for the picture slash pattern that represents where banks are buying and selling in the markets so that we can buy and sell there too. You know, again, the key to identifying where prices are going to turn and where they're going to move to, right, is to identify where supply and demand, prices always turn at price levels where supply and demand are off balance, right? So we just can find those areas on the chart, we're all set. Now, again, for those that don't know me, I started my career on the floor of the Chicago Mercantile Exchange, and I didn't start on the retail side of the business. I started on the, the bank institution side of the business, and I started in the currency markets. So there's two floors at the CME. There were back then. And upstairs you had the currencies. That's where I was. So, I just trained my eye to see what that looks like. And what's interesting is when you go through that experience, you see that real supply and demand in the market, which is what we're all looking for, is very different than conventional technical analysis. So different that often, a buy signal on one side is a sell signal on the other, and vice versa. And this is why you see, again, banks, institutions, individuals who really know what they're doing do very well, and the majority of retail traders lose. Okay, there's a big gap between the two. So let's dive in here. As I see, there's a lot of new faces here. Let's dive in and get started, and we will look for some of these opportunities. There's a couple I'm waiting for, and let me take you over to that. We'll start with the Aussie dollar. I'll mix it up between the futures and the spot market. So let's go to the Aussie dollar futures. And we'll wait for the charts to come up. Okay. So if you take a look, the Aussie dollar's been obviously declining, and it's every time it rallies into a supply level, it falls. We've been going over this in these FX Street sessions. If you look at the 4-hour chart here, we do have this big area of supply that price came to and fell from. But sitting just up in that area. So if the Aussie dollar should rally again, I'm going to point your eye to a level that should be pretty good. Let me take you back here on look at that 10-minute chart of the Aussie. There's nothing magical about the 10-minute chart at all. In fact, let me make it a little bit bigger time frame so we don't have to squirm so much. Remember, there's no such thing as a perfect time frame, a magical time frame. Okay. We look at various time frames, both large and small, to for the same reason that a doctor looks at multiple. When they look at X-rays, they look at multiple pictures. They're looking at the same body part, but through different different pictures. It's the same thing here. And obviously, our quest again is to find that supply-demand imbalance. Maybe I can make this even bigger so that this one so much. Let's see, it might be too big. No, I think we're okay. There we are. So if the market should rally, keep an eye on this little level right here. And as we find these, I'll talk through them and keep it nice and basic for you, because again, I know there's a lot of new members here. So how do we know that banks are selling up there? And why would we want to sell there? And how do we know that not only there's a supply-demand imbalance, because you should be able to see the screen. Not only is there a supply-demand imbalance, but there's a big one. Can everyone else see the screen okay? Did we lose connection here? It looks fine on my end, but okay. Maybe you guys want to reload your charts or something. So let's look at the level. We've got the picture or pattern, which is key. It tells us this is a fresh level. But, you know, we ask ourselves a few questions, right? We call these things odds and answers. Number one, how did prices leave the level or move away from the level? Was that a strong drop in price or a gradual drop in price? This one was a strong drop in price. Okay? Our first clue that there's a big supply-demand imbalance there. Number two, how much time did price spend at the level? Well, if you look, price spent very little time there. Again, suggesting a big imbalance. Remember, the less time price spends at a level, the more out of balance supply and demand is at the level. Next, how far did pricing move away from the area? Look at how far it dropped before possibly moving back to the level. Okay. How far prices moved away from the level before returning back to the level? That one speaks to probability and profit zone. In other words, the farther price has to travel to reach this supply level, right? When price gets up there, we're going to sell short, right? But who are we going to sell to? You have to really consider that every time you place a trade. You know, when you sell, who's the buyer? When you buy, who's the seller? Why are they buying from you and selling to you? Okay? So, in this case, because price has to rally so much to get to this level because the original drop went so far, we would be selling to a buyer who's buying after a huge rally in price. Okay? Not just any old rally in price. So someone would be buying after a big rally in price and right into a price level where the chart's telling us banks are big sellers. That's the picture that represents a lot of unfilled orders. Graham's bringing up a good point, which is the next one. Because of all this activity over here in the middle of the chart, which caused this prices to stop here and decline, it's taking a lot of buying power. It will take a lot of buying power to get up to our supply level. More than if all this price action wasn't over here to the left. Okay? So anyway, I didn't want to spend too much time on this. Looks like a great opportunity. Specifically, we are talking about 71.75 to 71.80. So I would add a little bit on the stop there. I'd probably go, make it stop around 71.85. That's fine. Okay, let me just read back here a little bit. I see some stuff in the chat. No, not 71.40. Yeah, not 71.40. That's not a fresh supply level. Let's see, good price. Price moves down into a demand level. We don't really have any super quality demand levels on this chart, but if price does move down to a demand level and moves higher, that's fine. Again, you have a nice big profit zone there. Risk reward looks very ideal already. Let's look at some others. Get to okay, that's the Aussie dollar. And again, I can look at I can go over any of these if you want to. Let's go over to the yen. I've been involved in that one for days here, specifically off this level right here. Just a second while the charts catch up. Okay, so price rallied into this really key supply zone up here, and now it's turning lower. But if you look below, there's quite a bit of room. So if you're in that trade, great. If you're not, is there a way to get back in that trade or get in that trade from here, given that you have such a big profit zone below? So if we take a look at the chart, now we're looking at the spot market, just looking for supply levels above current price. Let's do that. Yeah, we're going to have to be careful. The reality is we don't. There is no first supply level in the action that we're looking at here. So we would probably, oh, wait, I think I have one more time frame. I think it's one. No, not really. So we would wait for this one. We would wait for a supply level to form, to develop. And once it does, we look for a move down to the 122 area. Okay? So watch for that. Now I have a whole list of markets here. I can go over, I can just keep going through my list. Or if you have a market that you really want to look at, I'm happy to do that too. I mean, this is all about you, so you let me know. Let's keep going. With Euro. We can start the charts a little slow. Now let's take a look at Euro. So as you know, for those that have been with us for a while, we've been pretty bearish on the Euro for some time. No reason for that thought to continue, but there is some supply below we'll take a look at. Okay. Quick peek at the weekly there. It's important to know where you're at on the weekly, though. You can see on the weekly, you really don't have much till quite a bit lower. Okay. Let's go down to daily. Okay, there's the daily. But hang on a second. I know there was a level we were interested in earlier. There we go. Okay, so we had these levels in last time. I'm not sure why they didn't hold, but this level right there, and this one right here. Now these are off daily charts, so this is a pretty big deal. You don't usually find supply or demand zones that high quality on larger time frames. It's great when you do, you just you don't see it too often. So let's put these levels out there. And I know they're a little ways below current price, but you never know when that big move is going to come, and you want to be ready and waiting. The other thing is, even though we're looking at a buying opportunity down here, what's key is that we also know where that demand zone is, so we know how long and how far we can keep shorting the market. Okay, that's just as important. Okay, so the 102.70 area. That means we should be fairly comfortable shorting down to that level. Now, if we look at what's below us here on the 4-hour chart, and then the supply zones above are pretty obvious, but we'll take a look at that in a minute. You can see down here, there's really nothing. You had some fresh demand, but it's not fresh anymore. Price has been there. So we pull this all the way down. Now you're way down there. We're going to need more data, but okay. So my point is with that is there's room. So now we let's put our levels in up here. It's 1, change that one. And there you go. So the point of what we did to start with here with the euro was to see what our profit zone is on the down phase. As you know, we've been bearish the euro for a while, so how much room is left? Where is this going? And the chart tells us there's plenty of room still below. I would certainly buy when prices get down there, but that's going to be, it's probably not going to happen anytime soon. But the other point of that I just mentioned was we want to know that, can we keep shorting? And if so, what do the profit zones look like? And I would say they still look very healthy. We're still not close to that larger time frame demand. And the only thing that's going to stop this larger time frame downtrend in the euro is larger time frame demand. And that's where the next uptrend will start. Does that make sense? Okay. All right, so let's move on to, here's those prices. Let's move on to another market. Let's see. Yeah, we can take a look at the DAX. Just a second. Give me 1 second. I'm just gonna just have to do something to this cord real quick. Okay, there we go. That should be better. That sound a little better? Good. All right, let's take a look at the DAX. Some old levels in here. DAX is a great market, so just so you know, for those of you that are new to this, don't just jump in and start trading the DAX. This is a big money equity index futures market. It's found on the Eurex exchange. So if we go to the very large time frame, the daily, just so you can see where prices are at and what's going on. The DAX is a great market, though. Great, great market. So if we go there. Oops. Okay, so there's supply. You can see the market is struggling at the supply area of supply. There's a little bit of demand down here. So we'll put that in. Now, if you get a move from that supply to that demand, that's a massive, massive trade. That's a big move. But again, we're looking at the larger time frame first because that will dictate what we're okay doing in the smaller time frames, right? Okay. So we know that we're closer to larger time frame supply than demand. So as we go to the smaller time frames, we'll look for shorting opportunities, not buying opportunities up here. Does everybody get that? And that's kind of one of the main reasons why we just did this. All right, so now you go to the small time frame. Ooh, and look what just popped up. We may have a trade in the next few minutes here. Look at that. Little baby supply level here on a 2-minute chart. Let's put some levels on here. Okay. Next one. Anybody who trades the DAX here with us? Anybody trade the DAX? Okay, good. Yeah, so this is a great market. Watch this little supply zone here. That's, let's see, 1024 to 1030. You have to stop above that level. Keep an eye on that one. Above that, there's more levels, but this one will come up first. We're going to spend more time on that. And again, we're comfortable shorting rallies into these levels because of what we just saw in the larger time frame. Okay, just a quick look at another little chart here. And yeah, we see in the last like 30 minutes, all that happened is price came up to supply and is now falling pretty good. Okay, so we'll leave it at that. That's our opportunity in the DAX. Yeah, Eugene, make sure you understand all that first. So there's plenty of information to help you with that. Yeah, make sure futures are a great set of markets, but make sure you know exactly what you're doing before you get into them. They can be very low risk if you don't know, if you know what you're doing. They can, like anything else, they can be high risk if you don't. So make sure you know what you're doing. Okay. Just going to scroll back. Let's see what other markets. The S&P, we can go over the S&P, but it's going to be very similar to the DAX. We can do it really quick. And if you have other FX markets you want to look at, let me know. We looked at the Aussie, we looked at the yen, we looked at the DAX. We can look at oil, sure. Okay. So yesterday, with our members, we were looking at the 60-minute level in the S&P, and that ended up working out really well. I have actually had a position on in this market, so just full disclosure, I always try to tell you, the markets I have a position on. So I have a bearish position on in the S&P. I've had it on. So where do we go from here? Obviously, the S&P is down again today. I guess let's go to this larger time frame first. Looking where the S&P is in this larger time frame, is there room below? In other words, is there room to the fresh demand zone below current price? Because ultimately, that's where prices are going to stop, and that's where they're going to turn higher. Yeah, exactly, Graham. And remember, how many times have we seen this? Just that lack of demand and prices just drift lower. So let's go from that to a smaller time frame. And again, this is going to be very similar to the DAX. Let's look. We come down to the 60-minute. We have a little level above. Let's go on a really small time frame. Okay, if you're day trading the S&P, you can probably get into short rally mode here. You do have some fresh supply zones above. You're now coming down to a price point where if you look to the left, we've been there like 3 times, right? So that tells us that the floor is not as strong as it was. We've now been down there 3 times, which means those unfilled orders that caused prices to turn higher those prior times are now filled. Filled orders means prices should have no problem going through that area. To participate in that, we would want to find a low-risk area to get short. Okay, so if you look just above, maybe the 2058, see this area right here? Again, this is the same thing as the DAX we just went over. Okay, there you go, 58. So watch that 58. We're on a 1 minute chart there, so that's a pretty small time frame. They don't get much more than that. Ideally, what you want to see is prices, it'd be nice if they went through that low first, but no, it's okay. Actually, this is fine. So keep an eye on the S&P. So you can see in the larger time frame from the turn, the 60-minute turn yesterday, still our fresh demand is much lower. We can get into short rally mode. If you look on the weekly chart, picture doesn't get much better than this, right? We're just coming off this larger time frame weekly rally base drop supply. So same outlook, same scenario as the DAX. We'd be into short rally mode, and that's because prices are way up where they're at, and because of this lack of demand below. Next market, yep, we can look at the Canadian. That's not a problem. Okay. Just wait for this one chart to catch up. There we are. Get rid of this old level. That old level worked out great for us. Remember that one? It's used up now. So again, real quick, let's start with the larger time frame. You can see we've come up to this area over here to the left. This kind of rally base drop supply. Interesting. Okay. So we know where we're at. We have some supply not too far above. So again, we would go into, where's the profit zone? In all these we're looking at, it's important to look for the level. You have to have that. But your analysis should really have you looking at the profit zone first. Where's that area on the chart where there is just such a big lack of trading activity, meaning prices should easily be able to move through that level? Okay, let's go down to a smaller time frame. The 4 hour here, I was looking at this level the other day. That looks really good. And I'll go over why in just a second. And it's almost like, let's see how big this range is. There's a 4 hour chart. Okay, so there's really two, there's two levels in here on top of each other. Okay, so if the Canadian, gets up to that level, well, let's look at the level itself first. First, we have a rally base drop supply level right here with the yellow boxes. That's ideal. That's that pattern that represents, sort of selling. We have two little supply levels on top of each other. So, think of a trade desk, right? You have stacks of sell orders at this price point. You're going to expect prices to turn there. The only thing that would make that even stronger is if there was another stack of orders just above it or just below it, right? So this is what that picture looks like on a price chart. You have two supply zones on top of each other. Next, look again, just like I mentioned number one in that last example a little bit ago. How did prices leave the level? Notice a super strong drop in price. The only picture that would be better than that would be a gap down. But that's this is the next best thing. So really good. Big drop away from that level, suggesting a big supply-demand imbalance at the level. And of course, how much trading took place at the level? Very little trading. Again, suggesting a big supply-demand imbalance at the level. Don't forget the other one. How far did prices move away from the area? Look at how far they moved down before returning back to the level. That's ideal as well because it opens up that initial profit zone. And remember, it speaks to probability and profit zones. Okay? Now, where's the nearest area of demand below that we should be worried about, that we should be concerned with? Well, where do you think that is? Look at the chart. Let me know where the demand is that we should be worried about. Okay, I want to give you a little chance to answer. All right, so most people are coming up with let's see here. Okay, so we've got a couple areas to look at. So first of all, let's look at this one with the circle. So we're looking at a 4-hour chart. We have, let's see, 2, 4, 6, 8, 10, about 11 candles in there, right? About 11 candles in that base. That means, and we're looking at a 4-hour chart, that means price spent a lot of time in there, okay? And inside there, it's a pretty big range from top to bottom. So when you have that big range in an area where, and price spent lots of time there, is that the picture of orders being filled or unfilled orders? What does that picture represent? You have a price point where you have a lot of whippy trading and it spends a lot of time there. Yeah, that's a picture of orders being filled or unfilled orders. Right, so all of you are saying filled orders, and I agree with you. Okay, that picture represents filled orders. So is price going to turn at a level where there's filled orders, or is it going to go right through it? What would we expect to happen? Yeah, we expect it to go right through it. So that's not a demand zone at all that we would, that we would think would cause prices to turn higher. And then, let's look at the other two. So next down, you have these pivot lows here. That's certainly not demand. That's the book version of support, but that's not demand. Okay, we would never call that demand, and we never have. Next below that, we've got this area right here. Okay, but again, that's not demand. That's just a pivot low with that wick that goes pretty far down. We would never call that demand. It doesn't anywhere come close to meeting the definition. This level down here, though, coming out of this drop base rally, this one looks okay. And Graham, I think you got it earlier from what I saw in the chat. Let's see here. Okay, now we've almost already had a pullback into that level, but notice prices right here. But notice prices could not get back there. It's almost like there was an attempt, but couldn't happen. Why? Well, that's a clue that there's a big supply-demand imbalance in that area. Okay? And that is the Canadian. But again, knowing where whoops. Let's go back to that chart real quick. Knowing where prices, so, our price is closer to larger time frame supply or larger time frame demand. So we're much closer to supply. So we can keep buying on the smaller time frames, but as soon as we get anywhere close to 134, we want to stop. But we know we can look for, shorting opportunities. So if we come down to, our pretty small time frames here, let's see. Well, that's a pretty big range there. Okay, just want to see what all that would look like. So the area of interest is right up in here. What we're probably going to do is end up, shorting at a smaller level inside that. But right now, I would just, I would leave it alone. Let prices get up above the 133.20 area and up into some small time frame supply. We know we have a huge profit zone on the downside. And then if prices do get up to the 134, that's great. We would be I'd want to be a seller up there. It's a great larger time frame area. Okay, let me get back to that. And I'm talking about that one right there. All right. So I know we're out of time here, and I just wanted to put my email address in the chat, Seiden@tradingacademy.com. Sorry for the short delay when we started, but I felt like we got through quite a few markets, and each one of them has some great opportunities. So make sure you either wrote these down or review them, and even though most of them may not hit in the next couple hours, or even may not even make the entry today, over time, almost every trade we've put out at FX Street meets entry. So, and I wanted to explain things a little bit deeper today than I normally do. Normally we just run through the markets and set up trades. But if you have any questions, just shoot me an email, Seiden@tradingacademy.com. All right, thanks, folks. Have a great rest of your day. See you soon.